Why is it saying error? Good morning. Can you hear me pretty well? I think I fixed my mic. Okay, cool. Let me go ahead and share my screen. Okay. I'm gonna wait like 2 more minutes to see if anyone else joins. If not, then we'll just start. Okay, we can go ahead and just start. So today's lesson is just mastering market structure. So I'm just gonna be discussing breakouts, divergence, volume, and basically how you can identify when to, hop in a trade with those couple of things. So the first thing is gonna be, the first thing is going to be about breakouts. So, what is a breakout? It just refers to a point when the market breaks beyond a key level, and that key level is either going to be support or resistance. So, either the floor or the ceiling of something. And then it's just a technical pattern that can be seen in a channel, in a horizontal level, or even a trend line. So, these are some examples right here. So in this zone right here, like we marked up, not last week, but the week before, just a zone with the support down here and the resistance here. So that zone, it's just going to show consolidation in this example. And then this is a breakout right here. So it went below this support level. So it went below here. It came back and retested, and it continued to, ultimately go down. No worries, no worries. It'll always be here for you to play back as well, so that's not a problem. And then in this second example right here, this is just going to be a rising trend line, which equates to an uptrend. So obviously everything is going up. They're obviously higher highs. So just like we discussed 2 weeks ago, here's a high, and then this next high right here is higher than the previous high, and so on and so forth. So it also broke out at this trend line right here. It went down. It hasn't necessarily retested the area yet, but it probably will be here shortly. But regardless, this is still considered a breakout due to the fact that it went below, the support level, which would be here on this uptrend. And then the MACD is just a type of indicator, so you can see the change in that as well. I didn't want to talk too much about indicators today, just because I try to emphasize trading without them. But you'll see a lot of examples in here where an indicator is used to confirm it. But the indicator isn't a necessity to identify any of these things. So the breakout, the divergence, volume, or anything like that. Mm. Okay, so how do we confirm a breakout before entering? So basically, breakouts occur when price moves beyond key levels. Again, just that support or resistance. There are fake breakouts, so you want to try to avoid those as well as liquidity grabs. So a fake breakout or a fake out would be kind of what I showed you earlier, where technically it still is a breakout. However, it just hadn't retested that area and continued in the direction. So this is a more set in stone example of a breakout. So here we went from a downtrend to a little bit of consolidation back into an uptrend right here. Due to this chart, I really can't tell if this was a support or resistance, area, but whatever the case is, um, it initially may have been a support zone. Now it could be a resistance zone. So I'm assuming it's a resistance zone, just the way the chart is marked up. So the breakout is here. It, rose above that area of support or resistance. It went up for a little bit more. It made a high right here, but it also came back down, retested that area of resistance or support, and then it shot back up. So the confirmation techniques would be to retest the broken level, which it did right here. It came back, and then it shot back up. So that's a good confirmation. Another one would be increase in volume, which we'll talk about a little further down. And then strong momentum candlesticks. So those would be candlesticks with a long body, or a candlestick with like a normal sized body. However, they don't have long wicks. Like I talked about in the last, session, um, longer wicks, they are considered to be rejecting price at that area. And then the last confirmation would be indicator confirmation. So just the RSI and the MACD. Um, so we'll talk about those in the next session. Um, but those are just ways you can read, like when something is being overbought, oversold, or volume in the market. So again, in comparison to the previous one that I just showed, where it hasn't been retested yet, this would probably be considered a fake out, since it's taken a while for it to retest. So I wouldn't necessarily enter there, or if I were to enter, I would enter for a much shorter position, than if I were able to see this area right here, where it came back down and retested. So moving on to divergence and spotting an early trend reversal. So what is divergence? Divergence is basically when the asset price moves in the opposite direction to what technical indicators indicate. So here are a couple examples. There are two types of divergence. There's regular divergence and then there's hidden divergence. So with regular divergence, it signals trend reversals. So when it's bullish, price is low, has a lower low, and the indicator has a higher low. As you can see in this first box, or in this first quadrant right here. And then if it's bearish, price has a higher high. However, the indicator has a lower high. And then as you can see here with the hidden divergence, the trend continuation signal, how can I explain that? When it's hidden price, it has a higher low, but the indicator is going to have a lower low. And then if it's hidden and bearish, the price is going to be at a lower high than the previous high, as you can see in this fourth quadrant right here. However, the indicator will have a higher high, as you can see in this indicator below it in the purple. So the best ways to, I don't want to necessarily say see these, because again, you can identify all of this without any indicators. But I guess you could say a way you could practice it is with the indicators again. So the RSI, the MACD, and the stochastic. And I'll get into, just how the indicators and things work probably in next week or the week after. So, how to read volume with price action. So, first of all, what is volume? It refers to the total number of currency pairs being bought and sold within a specific time period, essentially indicating the level of market activity and liquidity for the currency pair. A higher volume signifies more traders participating in the market, potentially leading to stronger price movement. So volume is pretty straightforward. As you can see in this graphic right here, price is increasing. There's an uptrend. There are higher highs. There are higher lows. So that's how we know it's an uptrend. So it's just accumulating. So as price is rising, you can also see down here. I'm not sure which indicator that is, to be honest. Or it could be a RSI in a different format. But as price is accumulating or it's ascending, you can also see, down here with the green lines at the bottom, that indicates volume, and that's also increasing. Again, how do we read volume with price action? So volume confirms breakout and trend strength. So the higher the volume with, an identified breakout, it equals a stronger move. When there's low volume with a breakout, it indicates it could be like a potential fake out. So basically just going back to that area not being retested again. So volume spikes can indicate trend exhaustion, which pretty much means like a trend has been going up for, I don't know, let's just say like an hour and a half. So with that being said, everything that goes up must come down. So it could be an indication that there will be a breakout, which would lead, to selling. So basically, you're just going to look for accumulation and distribution zones. So we just discussed accumulation up here. It doesn't necessarily have to be an uptrend. It could be a downtrend as well, as long as there's just like a steady increase or decrease in the market that matches the volume, or it will reflect the volume. So what is a distribution zone? It refers to a price range on a chart where large sellers are actively selling a currency pair, usually after a significant price increase, indicating a potential downward trend as they distribute their holdings, and is often considered a key area of resistance where traders look to sell rather than buy. Essentially, it's a supply zone where selling pressure is big. So as you can see right here, um, on this little graphic is just representing a chart. So everything accumulates right here. It's, rising. So we now have this supply zone, and it'll consolidate for a little bit, and then it'll technically break out right here where my cursor is. And then it'll reaccumulate, and then it'll shoot up from there. So the next thing is just stop loss and take profit placement. So here's a good example. This I can't really say where they entered, but just using this graphic, I'm able to tell that whatever they did, they ended up buying due to the take profit being above the stop loss. So it's important to place the stop loss before key support or above resistance, just depending on if you're buying or selling. You also want to avoid placing a stop loss too tight. So when you place a stop loss too close to your entry, a lot of times you need to give the market time to adjust. So you don't want to basically rip yourself off. So it's important to leave just a little wiggle room just in case, it does dip or increase or whatever. But that won't be the final direction of price while you're in that trade. It says use the ATR to determine volatility. So you could adjust your stop loss or take profit. Again, you don't need an indicator or anything like that to determine what your take profit and stop loss are. I'll show everyone how to, place a comfortable take profit, a realistic take profit, and also a reasonable stop loss on trades next week. And then you also want to set your take profit, based on a good risk reward ratio. So 1 to 2, 1 to 3. Also, you want to have it sort of at a key element. So where do you predict the next resistance to be if you're buying, or where do you predict, or do you think it's going to go back down to the support if you're selling? So for this week's homework, basically after everything we discussed, obviously this video will be saved if you need a refresher, if you weren't here, but on any chart, it doesn't matter what it is. It could be a currency, a commodity, an indice, or even any type of crypto. So what I want you guys to do is identify 3 breakouts on any chart. Preferably if it's a real breakout and not a fake out like we discussed earlier. So real breakout meaning that it did come back and retest that area of support or resistance, and then it shot back the way that it was going. Also spot divergence patterns. I guess like another 3 for those. I didn't put a number, but try to spot 3 divergence patterns. Also analyze volume patterns. So that just means to, if you see prices continuing to go up, make sure that volume is reflecting it. It will, but I just want to make sure you guys understand, what you're seeing like in real time. I'd say do it on, do it on a 30-minute chart or an hour chart, just so it's not too big and it's not too, but it's also not too small. Also practice placing a stop loss and a take profit. So I'll show you guys how to actually input it when you're about to take a trade. But right now, I just want you guys to mark it up on a chart It could just be a zone you think is best. It doesn't have to be an actual number, like, I don't know, like whatever is on the chart, whatever price is. It could just be a zone that you think would be a comfortable area to place a stop loss and a take profit. I feel like I kind of like flew by everything. I thought I was gonna be talking longer than this, but so yeah, if any of you guys have any question about a breakout, divergence, volume, a distribution zone, or anything like that, you can leave it in the chat, and I'll get it answered. Oh, I feel like was I going fast? I'm so sorry. Where is everyone? Yeah, I was wondering that too. I waited a couple minutes for everyone to come. Okay, cool, cool. Okay, awesome. Okay, so if you guys don't have any questions, then I guess it's a wrap. Again, I really thought like I'd be talking for longer than this, but I guess like with the graphics and everything, it helped since I didn't have to go to TradingView and manually mark everything up. Okay, sounds good. Just put everything in the chat as far as homework. I'll put my own stuff in there as well so you guys can, get a good idea. I know you guys said you're pretty solid on it, but just in case and for the others. Absolutely. Okay, well, I'll let you guys enjoy your day. I'm done here. Let me know if you have any questions in the chat later on as well. I'll see you guys next week.